And today, we're focusing on Peloton, which is embarking on a sweeping overhaul that includes cutting nearly 800 jobs, raising prices for machines, and outsourcing functions such as equipment deliveries and customer service. Tay, obviously, we know this was one of the big pandemic winners, but it has been a roller coaster ride for the business over the last couple of years.
Indeed, really, through the booms of COVID and the lockdowns to maybe the busts of the reopening. That's actually where I want to go next, to their very own Ed Ludlow, who also has been all over this story. Ed, your reaction to this?
Yeah, it's the idea of strategy versus reality, right? The strategy under the new CEO was to shift to a focus on services revenue, subscriptions for the classes, and away from a reliance on hardware. The reality is that they were confronted by just ginormous fixed costs. The quote from Barry McCarthy is that cash is oxygen and oxygen is life, right? You know, clearly they're looking at how they run the company. So the basics are cutting 800 more jobs. That's on top of the 3,000 jobs that were cut in February. Raising prices again on the Bike Plus, which is a U-turn from a price cut in April. And then a real shift to outsourcing to third parties. Right now, customer support jobs are going to get cut. So when you need customer support, they will outsource that to a third party. I'm a Peloton owner and user, and when I had mine delivered, some nice chaps in Peloton gear and a Peloton van turned up and installed it. Well, that's gone too. They're now going to completely outsource the delivery and installment of the bikes to third parties they were already working with. So cost-cutting, belt tightening, and really look at the operating costs of this company.
So to your point, Ed, continuing some things we were already seeing signs of.
Yes.
You know, it's been a busy week where we've talked about pricing, we've talked about Disney Plus and streaming. On the pricing side, what do we know? Do we have a lot of hard data on the various price points where the storyline change or the consumer friction might lie for a company like Peloton?
Yeah, so the big picture of earnings season was the question around how the luxury end of the market holds up, right? Apple gave us some evidence that the consumer continued to spend on the higher end phone handset, for example. And we will continue next week when we have retail earnings to ask that question. You know, Peloton's a specific case, right? They cut prices in April because they wanted to get to the market, right? They wanted volume. They wanted to retain the customer base and then build on it from there. They are now doing a U-turn. They cut prices by 500 on Bike Plus. They're now raising them by 500, as you just saw on your screen. And so I think the real question is like, what is the market actually there? The addressable market, people are willing to spend. Lots of us have returned to the gym. That is the pandemic era story, right, of boom and bust. So, you know, they're experimenting, but ultimately the long term is a higher margin revenue from the subscription that they want to focus on.